Welcome back. Chipmaker Nvidia now reportedly planning to release a downgraded version of its H20 chip to skirt China export controls, but it's planning around a White House that has been sending mixed signals about their strategy for American AI dominance. Deirdre Bosa has more in today's Tech Check. Hey, Dee.
Leslie, you said it. The signal from the White House has been anything but clear, so it's not surprising that Nvidia would go ahead with a modified version. After all, the H20 had slipped through for over a year before Washington finally closed the loophole, giving Nvidia enough time to clear some $18 billion worth of orders and prep a plan B. Now, it is still the lag between policy and enforcement that is raising bigger questions for the AI trade at large. The Trump administration, yes, it has scrapped the AI diffusion rule, but still hasn't said what is going to replace it. In the void, voices like AI czar David Sachs starting to flip, now blaming U.S. red tape, not Chinese competition, for America falling behind. In a post yesterday, Sachs points to a recent piece in the New York Times from former Google CEO Eric Schmidt. Schmidt warns that Chinese tech is starting to pull ahead, pointing to the success of DeepSeek, Temu, TikTok. He argues that, quote, history has shown us that those who adopt and diffuse a technology are the fastest to win. But that runs straight into the strategy that Washington has been leaning into the past few years over Biden and over Trump administrations. That is export bans, tariffs, licensing rules, all designed to slow China's access by containing access to U.S. technology. One that Sachs argued for just a few weeks ago on the All In Pod. Yet here we are, guys. Nvidia has never really left the Chinese market. Huawei is shipping its own chips. DeepSeek is gaining global traction. Containment has not actually stopped diffusion. It's only pushed it outside of U.S. control. And Sachs, a key voice in the president's inner circle, he seems to be coming around to that truth. So for investors, that could be a key inflection point, maybe even signaling a shift towards less restrictions, which would be bullish for the AI trade at large, which of course has struggled this year. Then again, guys, and there's always a then again, tariffs, export bans, all remains a moving target. And chips, this is the hard truth as well. Chips have become leverage in broader trade negotiations. So even if voices like Sachs that are close to Trump, that are shifting, there's still no guarantee that policy is going to follow. The market continues to trade on uncertainty. And Nvidia, though, it is finding ways to win in this gray area. Not that investors are necessarily rewarding it these days because there is just so much uncertainty. But, we track all the whispers from the people around Trump, and there does seem to be a change happening between containment and diffusion here.
After Taiwan Ministry of Finance released export data showing that automatic data processing equipment exports, excluding laptops, reached $13.25 billion in April, up 10.2% month-over-month from March's $12.03 billion, surpassing the typical seasonal increase of 2.6% month-over-month, and marking the fifth consecutive month of sequential gains. UBS analyst Timothy Arcuri reiterated his buy rating and a $180 price target for Nvidia, a semiconductor giant with a market capitalization of $2.84 trillion and a perfect Piotrowski score of 9. Arcuri said the three-month period corresponding to Nvidia's FQ1, April, saw roughly a 63% quarter-over-quarter increase, the most significant quarterly rise in over a decade. This growth significantly outpaces the roughly 16% quarter-over-quarter growth that UBS had forecast for Nvidia's data center revenue. But Arcuri cautioned against reading these numbers as a sign of good news for the company, pointing out that the data has not always accurately forecasted the company's performance in recent quarters, with the correlation fluctuating by mid-teen percentage points in either direction. Arcuri's commentary also said that although the export data may indicate underlying strength, it is still unclear whether the increase is the result of adjustments related to tariffs or actual market demand. Nvidia's stock has been scrutinized by investors, with data center revenue being a key area of interest. The company, which is known for its graphics processing units, GPUs, has seen a growing demand in data center applications, which has become a significant contributor to its revenue stream. Analysis shows the company is currently trading at fair value, with an excellent overall financial health score. The UBS analyst's reiteration of the buy rating and price target suggests a continued positive outlook on Nvidia's stock, despite the caution advised in interpreting the most recent export data. Investors and market observers will probably closely monitor future reports and Nvidia's own financial updates in order to assess the company's performance and growth trajectory as the company's next earnings report is set for May 28, 2025. In other recent news, Nvidia has been the subject of a number of significant advancements. Piper Sandler confirmed its overweight rating on Nvidia with a price objective of $150. The business did a sensitivity analysis on Nvidia's data center revenues, predicting a possible effect of $9.8 billion owing to lower capital expenditures. Nvidia's profits per share might drop by about $1.40 in this scenario. Amid uncertainty surrounding trade policy and economic direction, Nvidia's shares fell 1.5%, leading the so-called Magnificent Seven equities to slump. Alongside other tech giants like Amazon and Alphabet, Nvidia's shares increased by 3.7% in pre-market trading. In a separate development, Nvidia's CEO Jensen Huang met with U.S. lawmakers to discuss Huawei's growing AI capabilities and the implications of potential restrictions on Nvidia's chips in China. The meeting raised concerns about the global market demand for Huawei chips if AI models are optimized for them. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Really interested in the AI data center part, because this has been a real area of focus, of growth, and I'm interested in the momentum that you're seeing and how resilient it is. You're talking about uncertainty when it comes to smartphones and electronics in the future. Has there been any signal of uncertainty on spending on AI infrastructure?
Yeah, not that we've seen, Caroline. You've got Stargate, obviously a huge program that's being done between SoftBank and OpenAI, which is all around capital and power for data centers. You're seeing large CapEx spending by the major hyperscalers. But probably more importantly, I think we're nowhere close to really good enough in terms of the capability of what AI can do. Obviously, the advances have been amazing. And if you look at just what OpenAI has done with ChatGPT, it's been remarkable. But enterprise usage, from a mass deployment standpoint, is still quite modest. A factoid I like to refer to is ChatGPT used a petabyte of data to create the model. JP Morgan has 150 petabytes of data sitting inside their enterprise in one way, shape, or form. Harnessing that data, turning that data into real valuable information, and then helping productivity, there's a lot of white space there. And I think still there's a long way to see growth here.
There's been some uncertainty, of course, around ultimately how those that use your designs can ultimately sell their chips. And we've now got a pullback from the AI diffusion rule, as it's called here in the United States. It would seem that's going to be announced anytime soon by the Trump administration. Is that going to be a boost for your business? Do you think that leads to more certainty or actually lack of it? Because now we have countries having to negotiate on a case-by-case basis.
Yeah, I don't know that I could predict it. I haven't actually seen what the outcome looks like. The wonderful thing about our jobs these days, CEOs, is that we're reading the news and hearing that from you at real time. I think we'll just have to see is the short answer. I don't think AI demand is a bubble in any way, shape, or form. And as I said, I don't think we've gone anywhere close to reaching its true potential. When you think about end devices that will run AI models, everything will run them. They'll run in earbuds, they'll run in cars, they'll run on mobile phones. They're certainly going to run in the cloud, but they won't run exclusively in the cloud. And I think we still have a long way to go in this area. The progress has been remarkable, shocking in some ways, just how good the models have become. But there's still a long ways to go in terms of, I think, true AGI and then ultimately ASI.
Renee, your top 5 customers are responsible for 60% of revenue and are in China 20% of that. I'm curious as to how you're making an effort to diversify. That's a phenomenally concentrated client base, particularly when you consider that China, you might have some IP concerns around China.
Yeah, the industry that we're in has been seeing, quite a bit of consolidation, for quite some time. The amount of capital required to make chips is quite a bit. So you look at the number of companies who their end products are chips. It's shrank over the last number of years, and at the same time, you've got large hyperscalers, the Microsofts, the Metas, the Googles, the Amazons. That there's not many people who have that capital. That being said, the number of chips, the demand for chips, the compute has actually gone way up. So I probably don't think so much about the number of people who buy. I would get more worried if the quantity was going down, and we're not seeing that. And why are we not seeing that? The insatiable demand for more and more compute, driven by AI, I think again is we're in very early stages of it. You also have to remember that running these AI workloads, you still need to run them on top of running a Windows operating system, on top of running an iOS operating system, on top of running an IVI instrumentation inside a car, or autonomous. So it's not that AI compute replaces traditional compute, it's on top of, which is a strong demand signal for semiconductors.
According to a state media source, China's President Xi Jinping has committed self-reliance and self-strengthening to develop artificial intelligence in China. The country is enthusiastically fighting with the United States for supremacy in the AI arms race. Xi has emphasized that China should advance AI development by utilizing its new national system as a whole. To fully promote technical innovation, industrial development, and AI-powered applications, we must acknowledge the limitations and step up our efforts. Many analysts believe that China has already closed a large portion of the AI development gap with the United States, thanks to the introduction of DeepSeek and other models that have since emerged. Xi is also of the opinion that AI should not be a game of rich countries and the wealthy. Instead, he believes in more international governance and cooperation on AI. During his recent visit to Shanghai, he emphasized China's leading role in the global south, calling for more innovation, support for AI startups, and stronger global influence in technology. He also urged the city to expand its exploration of AI models and noted that more supportive policies for the technology should be rolled out. We must continue to strengthen basic research, focus our efforts on mastering core technologies like high-end chips and basic software, and develop an autonomous, controllable, and cooperative artificial intelligence basic software and hardware system. One of the most prominent analyst calls on Thursday, May 8th, was for Nvidia Corporation, where Bernstein reiterated the stock as outperform, stating that Nvidia's data center opportunity remains robust. The data center opportunity is enormous and still early, with material upside still possible. He was visiting the Shanghai-based New Development Bank, a multilateral lender of BRICS member nations, and he confirmed that China is ready to strengthen project cooperation with the bank and share development experience with other member countries. The visit highlights Xi's commitment to positioning China as the leader of the global south. The stock presently has a consensus buy recommendation from Wall Street analysts. The street high target of $235 suggests a 100.3% upside, while the average price target of $160 suggests a 35.85% upside. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Looking ahead to what is going to be high-stakes trade talks, the beginning of them at least, between the U.S. and China. They're taking place this weekend in Switzerland. Let's get over to Eamon Javers. He's at the White House and can bring us up to date. Eamon.
Yeah, good morning, David. President Trump getting the market's attention this morning with this social media post where he wrote 80% tariff on China seems right. Up to Scott B. That's Scott Bessent, the Treasury Secretary, obviously, who's going to talk to the Chinese this weekend. That would be a significant pullback from the 145% tariffs that are in place now. So the question is, when does the president want to do that? And I want to draw your attention to some potentially significant remarks a short time ago here at the White House from National Economic Council Director Kevin Hassett. Asked by reporters about the president's social media post there, he said this.
On China tomorrow, Trump said today 80% would be okay.
It will come out tomorrow what happens. It's a negotiation.
So you don't anticipate any drop in tariffs before those talks?
I think that everything will happen while the talks are happening, not before.
So note that Hassett said there it will come out tomorrow, and it will happen while the talks are happening. Now, that sets up a potentially dramatic scenario this weekend where we could see the president significantly walk back China tariffs as part of or immediately after the meeting in Switzerland between the U.S. and the Chinese negotiating teams. Now, I asked a White House official if that scenario could be coming. The official said there's a reason why Kevin made those remarks. So anything can happen here, guys. Note of caution, as always. But the president and his staff right now are leaning heavily into this idea of walking back those China tariffs, guys. Back over to you.
Yeah, interesting. Certainly, conceivably, I guess, would set the stage for talks that might progress from there, Eamon. That said, 80%. I mean, if people term 145% an embargo, I'm not quite sure how they'll term 80%, but it is still a fairly significant hurdle.
Yeah, I mean, the question is whether importers can make money at 80% or not. You know, does that sort of turn off the spigot altogether for imports from China, even if it's significantly lower than 145? At some point, it doesn't make any difference. If you can't make money, you're not going to trade, right? And then, look, the president's position changes on things. I mean, we saw yesterday a source familiar with the president's thinking come out and tell us that he was considering, in the tax bill context, allowing the rates on earners of $2.5 million and above to increase back to 39+% from 37 where they are now. That is a big thing for a Republican president to be talking about a tax increase on anybody, particularly the very top. Now we saw the president put out a social media post where he says, actually, you know, I'm fine if Congress does that. They don't have to. But arguing that ultimately the tax increases were not what doomed the first President Bush's administration. So the presidents are waffling on that after we got some indication that yesterday he was embracing the idea. So it's a moving target around here oftentimes, but they're leaning in now to this idea of walking back tariffs.
Nvidia, the leader in artificial intelligence chips, surpassed its 50-day average on May 1st and surpassed its 21-day average on April 25th. Nvidia has increased since late April after being negatively impacted earlier this year by worries about the growth of AI chips slowing down in the face of increased competition and potential tariff consequences. That raises the question of whether this is a brief reprieve or if the AI chip giant's troubles are over. The relative strength, RSE rating for Nvidia stock increased to 75 on Thursday from 69 the previous day, moving it into a higher percentile. Nvidia's jump places it barely below a crucial benchmark. A yellow flag is its D, accumulation distribution rating, which indicates that large funds are currently selling more shares than purchasing. Nvidia's SMR rating, sales plus profit margins plus return on equity, of A, is also excellent. However, its most recent quarterly report showed 71% earnings growth to 89 cents per share, while sales increased 78% year over year to $39.3 billion. The company's next report is due on or around May 28th. Analysts predict a milder but still strong 45% EPS growth on a 66% increase in sales to a record $43.1 billion. The world's top designer of graphics processing units, GPUs, and the leading supplier of chips driving the AI revolution, Nvidia is currently valued at $2.86 trillion and is suffering from the effects of ongoing trade restrictions. On May 6, 2025, CEO Jensen Huang expressed concerns about being shut out of China's AI market, estimating that it could reach $50 billion in the next 2 to 3 years, and that it would be a tremendous loss to miss out on it. Last month, the Trump administration prohibited the shipment of Nvidia H20 chips to China without a license, resulting in a $5.5 billion quarterly charge. To make matters more complicated, Bloomberg reported on May 7, 2025, that the Trump administration intends to lift some of the restrictions on AI chips that were put in place during the Biden administration. However, the government will continue to implement measures that target China, which could change the structure of international semiconductor trade restrictions, ARC. Invest recently bought 107,661 shares of Nvidia stock at a price of $12,223,829, and on May 5, 2025, Piper Sandler reiterated its overweight rating on Nvidia stock, maintaining a $150 price target. The firm cited a sensitivity analysis it conducted on Nvidia's data center revenues to determine the possible effects of a capital expenditure slowdown, which revealed that roughly 6.45% of the company's total data center revenue could be at risk, potentially affecting earnings per share by about $0.40. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Markets closing the week mostly lower, but the S&P is up more than 7% since April 11th. That's the date our next guest upgraded U.S. equities to attractive. Joining us now is David Lefkowitz from UBS Global Wealth Management. David, it's good to have you on. Good to check in here on this call. Now, markets bottomed like April 7th or 8th. That was that mini crash. We got a little bit of forbearance on the tariff side from the 90-day delay by the president. How are you viewing the market right now after we've recovered more than half of those total losses? And I guess now the stakes are maybe higher in terms of seeing some kind of trade talk progress.
Yeah, thanks, Michael. I think the backdrop is still fairly constructive. I mean, we got some very, very powerful and unusual contrarian buy signals in early April. We had a VIX that was, one of the highest readings we've seen in, some of the highest readings in its history. Investor sentiment was very, very cautious, and investor positioning was extremely depressed. And if you just run any numbers on when those things have happened in the past, U.S. stocks typically do quite well over the subsequent 12 months. So, obviously we've seen a little bit of a rebound here, as you pointed out. So I wouldn't get too hung up in the sort of day to day. Obviously, there's a lot of wood to chop with the trade negotiations. Everybody's expecting some slowdown in the data, that we're likely to see that. But I would stay focused on the big picture, is that those signals are still pretty valid, and we think stocks will ultimately kind of grind higher over the next 12 months or so.
Yeah, there's no doubt. I mean, all the breadth indicators and, people saying that you get one of these big reversals and sentiment getting really washed out definitely has good implications for 6 and 12 months ahead. But we are, 17% up off the intraday low from April 7th. I think a lot of those studies would suggest that's a pretty good few months worth of gains. And I guess bigger picture, I wonder conceptually what's going to get the S&P 500 back to challenging sort of the peak valuations, right? Don't you need a little more confidence to say that this market should be trading back toward 22 times earnings or something, which is where we fell from?
Yeah, I think a couple thoughts here, Michael. So when we've looked at when the volatility index, when the VIX has come down, and now it's back in, kind of the normal range, maybe higher end of the normal range, low 20s. When that has happened after a significant spike, usually that means we don't make new lows, right? So I think, we could be chopping around for a bit, but usually in the coming, few months, I don't think we're going to see more than a 5% or so sell-off in markets here. That would be entirely consistent with what we've seen historically. And look, I take your point on valuation. That is true. But we know that valuation is not a good predictor of near-term returns. It's much more powerful when we think about longer-term returns. And so I think what's going to be the more important driver is, when do we see the earnings momentum start to improve? And right now, I would say it's sort of coming down. Analysts are cutting estimates. As soon as analysts stop cutting estimates, then the market backdrop is, I think, in a more sustainable rally mode. And we'll probably get there later this year. But that's what I would be focusing on to think about the next leg higher.
And where within the market looks like it can maybe lead here? Sometimes when you do get a severe correction, you do get leadership shifts, or you get the market sort of shows its hand in terms of what comes back the fastest. So where would you emphasize?
Yeah, it's been really interesting, Michael. I mean, so, since April 2nd and since the market low, almost counterintuitively, what we've seen is sort of been the secular growth, the AI levered types of companies have been the market leaders off the bottom. They sort of got hit earlier in the year on concerns about the durability of some of these AI trends. And so I think that's giving us a bit of a signal. And, look, we certainly do like a lot of these secular growth companies in the coming years. We just think there's a huge opportunity within the AI ecosystem, and it's not just the technology companies. It's going to be all the infrastructure that's needed to support those companies. So, I mean, that's where we'd be focused. So that leads you to, sectors like tech, like comm services, like utilities, in terms of some of the power needs we're going to see there. So, I do think that, look, that's where we're probably going to get the earnings growth. And ultimately, that's, I think, what you want to focus on.